Hi guys, it's Crossroads here. Today we've got a special guest, Alejandro. We're going to talk about a number of different stocks that we have in common, some that certainly that we don't, and he's also a startup guy. So we're going to dig into it today. Alejandro, how are you?
I'm pretty good. How about yourself, Roy?
Doing well. Thank you for joining me. I think we've done one of these before, not on my channel, but a joint stream in the past. And yeah, this is I think my second time seeing you this way. Usually we interact on X, so this is a nice treat.
Yeah. I remember we did something on Robinhood, right?
Yeah,
Back in
back
the
when it
day.
was like under $10 or something like that.
They had just released, I think, Q3 last year or
Yeah.
Q2, and the stock just plummeted. And
Yep.
we were just going about like, are we wrong about this? I don't know. Like earnings seemed good, and then the because it was about to like reach 10, and then it dropped like to 7. And we're like, are we stupid? Are we just dumb? Maybe we're all wrong about this.
Yeah,
Uh
and that's gonna be a theme of a lot of the names that you and I have in common, and I wanna ask you, like, how you identify that in just a moment, of, like, versus a value trap. There's certainly value traps out there that seem cheap, that seem like that they're doing okay, but instead, like, you hit name after name after name, and we have some of those in common, where the market just hates it for the longest time, and all of a sudden, it just explodes. So, first, do you mind sharing, like, a little bit about yourself, your background, and then, your business as well?
Yeah, for sure. So I went to school in University of Florida. I don't know if some other people are familiar with that one, but I just did like mathematics and computer science. So I worked for a software company for a little while as a software engineer, and then eventually they got bought out for like $11 billion. So I got like a big payout in like restricted stock units. So back then I was like what, like 24, 25. So I got a bunch of money all at once, invested on Tesla. Tesla did a 20x on me, and I essentially like retired from corporate world at that point in
That's
time.
awesome.
Not to like indulge in luxuries or anything like that, but I had a little bit of more like I had a little bit of a leeway to then do the things that I wanted to. So essentially, I left that company because it essentially got bought out, and then they're like, everybody left. Essentially, I got hired to work in there as a firefighter, pretty much like putting out fires here and there. Um, and they essentially didn't need me anymore. So I had this, you know, big stack of Tesla at this point, and I'm like, let me just do my own thing. So essentially, I went to Europe for like a year and a half, and I was just like, sipping margaritas in Greece, and I just got bored of that. So essentially, I was like, okay, maybe let me do something productive back. And that's when I started Vizualstocks, because at this point in time, I was using something called Hypercharge, which got acquired by Public.com,
Mhm.
and I didn't see any tools in the market that would allow me to chart. Essentially, I was just like copying everything from the IR pages into like Excel, charting all that shit, and that you know how that is, right? Like it
Oh,
takes a
yeah.
long time. So I was like, maybe I don't want to do all this charting, all this like data collection. So that's why the idea came to me, right? And I just had time in my hands. So I was like, let me just code it up. It took me like 6 months. Essentially like around that time, then a lot of you guys were popping up, like Jesse, yourself, Arnie, Amit, and that's how I met all of the all of you guys little by little.
Yes.
So, but yeah, pretty much that's the whole like long story made short, if you could say it like that.
Yeah,
But yeah, you're looking at Enphase.
yeah, here's just so people can see like what this site looks like, and I'm just a free user to be honest, but it's very very inexpensive, and I probably just need to go ahead and subscribe. And it's not just visually attractive and having the numbers right here, like that's great. But what I love is that a lot of the names have core very important numbers that you're not going to find unless you dig through like the 10Q or that slide deck, but you have it just like right here, microinverter shipped, for instance, which is very important for Enphase, which we will talk about. Revenue by region, generation and storage shipped, and just a lot of customization that you can do as well with key charts, and it's fantastic. I need to just go ahead and bite the bullet and subscribe.
I-
So I'm
I'll,
going to
I'll,
put a
get-
link
I'll
below
get you
that.
some good package after we're done here. We'll
All
get you
right,
all the
sounds good.
all the new shit.
All right.
But yeah, I mean all of those like company specific KPIs, those are Nobody gives you that, so that essentially we had to go and collect manually like every single one of those. So it's, it was difficult to build like a team that would go, because initially I thought like maybe we could do it with AI, but whatever, AI is not good enough. So
No,
essentially,
not
yeah,
yet.
we do all of those manually, and then yeah, but I feel like with you as well, you also like pretty much hit almost every single like stock. You hit it with Palantir, SoFi, Robinhood, which initially you were doing like options, and then
Only, yeah.
you came to the light, and then like liked it as a potential long term play. But I mean, the option play was brilliant too.
Thanks.
You
Thanks.
went in when it was like enterprise value of 0. Okay, that's not a bad start. I bet you made like 10x on some of those leaps.
Yes.
I think you were doing leaps, right?
Yeah, yeah, I did all leaps. Yeah, we'll talk Robinhood first. Like that's one that just it surprised me in the sense that so I was looking at it just as a cyclical play, and you and I were looking at the same things, and you were focused on enterprise value and pounding the table. There's like maybe 6 people on all of Twitter, and it's a little exaggeration,
That's
but
how I
like
met Jesse because of
yeah, it every
Robinhood.
time like you or I would post something on Robinhood, there was just like hate, like this is a scummy
There
company and it's going to zero, and uh
GME. Remember
yeah,
that? The
oh
whole
yeah,
GME.
yeah.
It was
I mean,
always
like
the comments about GME.
yeah, I still see those.
You
It
still see
does seem
those
like,
those
but
haters?
it's a very different environment right now. Now that
Yeah,
Robinhood is at 40, it's suddenly more attractive than when it was at like $9. So
bro. That's so counterintuitive to me.
yeah. So what initially got you like interested in Robinhood? Like why did you recognize it first as an opportunity? And then what were you seeing? Talk about enterprise value, but what else
Mhm.
were you seeing that led you to go in heavy on Robinhood?
The main thing is I knew I was the best brokerage in town because I had tried some of the others like E Trade and Schwab, and I was just like they're just garbage, to be honest. So I come from a software world, so when I see good user interface and good user experience, the UX of it, people were just sleeping on that, because I was like, I've tried all of these others, they're all just not to a part. Like they're just like miles behind. Not miles, but like more than miles. I don't know. Like I don't know how to describe it. They're levels behind, and a lot of people back in the day they were like, and I say back in the day, it's like a year and a half or 2 years ago, right? But they were saying things like they could just copy the UX, copy the UI, and just
Yeah.
and I was like, if they could do that, that's the sort of thing that somebody who's never written like software like full stack would tell you, because they don't know any better. But the UI, you cannot just copy the UI, because it's not the UI that makes it good. It's the
Right.
back end behind everything that you see in the front. So when you see something like an app that has incredible UX, typically not the UI that makes it good. That's why SoFi at the time couldn't copy it either, because it felt clunky, it felt slow, because the machinery behind the UI is the thing that is important. It's not the actual UI. The actual UI is just like the makeup, but the thing behind it is what gives it the power, gives it the free flow in the speed. So that cannot be just copied by a legacy brokerage, because they would need to re-architect their whole infrastructure. And I don't know if you've seen the budgets for some of these software companies, and they're not software,
Yeah.
but they're more like financial services. They don't have the capital. It will take years, and it would a lot of them will go wrong, because they don't have the sort of talent that will be able to do that sort of like refactor. It's a like corporate level, like company level refactor. That is not just like something you can do in a day. Most people can even fail to do shit like that.
Yeah.
uh it's just not feasible. So a lot of people were looking at that from that angle, and there was a lot of hatred from like the GME and AMC thing. So I never like looked at that as strongly, because I was like, okay, a couple upset clients, but for the most
Oh yeah.
part, the regular user was not into those like Reddit, GME, oh my god, like so so essentially, like the way I looked at it, I was like, okay, they have the best product. Whenever we have a little bit of a bull market, a little bit of a VIX spike, a little bit of a crypto market, all of these revenues are gonna come back up. They're gonna grow a lot, and then the cherry on top, as you said, is the enterprise value of 0. At some point,
Yes.
even negative. And I was like, what? I'm getting the equity for free. because essentially, what is it that they had? A 7 bill in cash and bonds,
Yeah.
and they had something like 6.5 at some point in market cap, right? So you're getting a negative 500 million in enterprise value, and I'm like, are you guys serious? That's why, like, I overlooked SoFi and went straight into Robinhood, because it felt like such a deal, because you were getting the equity essentially for free. How did that happen? I have no idea how, like, the market allowed this to happen, but people were hating Robinhood at that particular point in time.
And as it still is, heavy institutional name. There's a little more retail presence now versus like there was none before. But
Absolutely.
even the institutions were sleeping on it. And honestly, like even like when I was looking, I'm like, it's a good company, maybe not like the most amazing ever, but it's trading at enterprise value, which is just insane. And they're nearly profitable at that. They actually flipped profitability.
Yeah.
I think in the quarter we were talking about, quarter three,
quarter two,
quarter
even
two.
like one before.
Yeah, that's right. And
So
then
they
the
went
loss.
into profitability, then they had a slight loss. But you know what? You know why they reacted like that? Because they didn't go into the nitty gritty of, they had a regulatory thing or something. A regulatory cost that they had to inquire, and then that made them unprofitable. But that was a one-time thing, right? Like if you had removed that, like we all did, we would have noticed it was 2 profitable quarters. But people were just like reacting to headlines. Man, it's so easy, bro. It's so easy to get alpha out of these noobs, bro.
I doubled down at that point. I'm just like, okay, like I looked through like multiple times, slide deck, the comments. I'm like, whatever people are seeing, I'm not seeing it. I'm going heavy. I should have gone heavier in hindsight, but I'm still very happy. I got the shirt, and I'm actually I'm going to Investor Day on it's Wednesday, so this next week. So that'll be fun just to see Vlad's vision. Now, the stock and the company is performing like incredibly well. Quarter three is probably their worst quarter, and they still grew 30-something% year over year. This year, it just. But it's close to $40 a share. Have you trimmed? Have you exited completely?
Definitely. No, I've definitely trimmed, because when we're buying this dog, it was at 3 price to sales. Now it's what, like 16 or something, like 15. I don't know. Like it's in the teens, right? So I have to trim. I have to trim because it's too high. So. And there's also better opportunities. So what I did, I mostly trimmed Robinhood to buy SoFi when I was like $7. So that worked out pretty well too. But essentially, like the only way I trim is if I see a better opportunity. I think the biggest mistake that people make when they're taking profits is they essentially take it all off the table. And that's what happened with Tesla a lot back in the day. A lot of my friends actually invested in Tesla when I was like $30 billion market cap. You know what happened? It went to 45, and then they thought it's gonna go back down, because it had gone back down for 3 years. It was in a cycle of going from 12 to 25 split adjusted. Back then I was like something like 180 and 420. So that was the range, right? But essentially they thought it's gonna do the same thing that it always does. So they took their 50% profit, bought some sort of, I don't know, like maybe you got the down payment for a Toyota Corolla, great, but you miss on a 20x life-changing money. So because you took everything off the table. I took profits on the way up, but I took like 3%, 5%, like very little, small amounts of profit. So because you don't know, it all comes back to pride, right? Like an ego. You think it's gonna go back down, and you think it's dead money, or you think you made so many assumptions based on past performance, right? And then a lot of the people, when they do that, they think they can predict the future. We can't. Nobody can. So as long as you know that, you're gonna make better decisions, because you're gonna account for the fact that you don't know. But people think they do know, and that's exactly what happened, not only with Tesla, but recently with SoFi. I was in that channel, right, for 2.5 years, and then all the people in the comments are like, it's dead money, opportunity cost at 7. And I'm like, you guys, if you could predict the future, you wouldn't be here commenting on my post, shit talking. So a lot of them, I think Chris, he put one on blast. The guy was like, at $7. He's like, I'm selling out of SoFi. I've been holding for 2.5 years. This is a big opportunity cost. I'm gonna go back. And he went and bought Nvidia to like recoup some of his losses.
Oh,
And Nvidia at a 3 trillion market cap. And I was like, oh, I don't know about that, but whatever. We were
like
laughing
long
about it now.
term, I'm sure Nvidia will be fine, but that's a common thing in retail is, get frustrated with the company you're in just because of the stock. Not, if SoFi was underperforming, if Robinhood was underperforming and things were deteriorating and there were some valid concerns of the business, like at that point for me, like I don't have a problem. It's not just trimming. It's like the thesis is broken. I'm done.
Right.
And I've been in companies like that before.
Right.
I've also been in others that just continue to run. And, there's that saying, let your winners run. So it's good to lock in some profits because like the other way is you never know like how high it can go, especially in a bull market.
Especially
You
on,
also never
on
know
options.
if that will last or if it's going to come back down. So it's not a bad idea to, have the mindset of like, where are you comfortable as far as your allocation? Where are you comfortable as far as your percent in your portfolio? Is there a better opportunity that you're very, very confident in versus like Robinhood? I'm in it long term now. I only have shares. I have actually no leaps. I sold all those, and basically just some of the proceeds of the leaps, it's like free shares for me. So it's great.
Pretty much, yeah.
But long term, I think they're going to be phenomenal. But the opportunity, I think, is still good where they're at. But it's not like ridiculous as it was when it was trading at $9 a share. It's not the same opportunity. And there's some companies that I think that are,
Yeah. A lot of them we're gonna talk about today. But pretty much, I mean, yeah, like people think they can predict the future. They don't look at the fundamentals. That's the biggest thing, right? Like they just they feel the vibes and they go with the vibes. And that's the perfect recipe for underperformance, right? So they don't look at the charts, or when they do look at the charts, they ignore it. Like it's not like we didn't show them the charts. We all showed them the price to sales ratios. We all showed them the forward ratios, the enterprise values, the revenue charts. For Robinhood also AUC, which is the biggest, most important thing for them. And we showed them those charts, and they just didn't. They ignored them, because it's just difficult to separate yourself from the herd. It's just so difficult. Everybody says they can do it. Nobody can do it. I cannot do it. Like I try to do it, but it's difficult. You know what I'm saying? Like for the most time, I have to look at people like yourself or Arnie or whoever. I have to, like feel like there's at least somebody in my boat, because if I'm alone in the boat, I feel like I need to have some sort of confirmation, because I'm flawed in many ways and I make many mistakes. So as long as I have confirmation, I can be like, okay, maybe I missed something. And that's where you guys help me a lot with Robinhood and SoFi, because maybe I was wrong. I've been wrong in the past many times. So the fact that you guys were there and you're not crazy. It's just all these other people are crazy. I was like, okay, perfect. I need that certain level of community.
Oh yeah, and that's one of those things. If you are, the type of investor that's looking for those opportunities, that an unhated name, if there's a lot of other, that are quality investors that you really track well, that are, they don't just look at one side of the equation and be bullish on every single thing. And that's so helpful in those downtimes when you're really wondering. You're like, okay, like Enphase is one of those we'll talk about, and it's been smashed, been up a little bit this week, but it's still smashed way down. And a lot of people like solar is dead. It's over in Nike. I'm not in Nike, but I had a post that just kind of blew up this week, and it's very divisive. And some people are like, hey, it's terrible. It's dead money, opportunity cost. People were saying the same thing about, Robinhood, certainly. SoFi is maybe the next name we'll talk about, where it was, it sat in that very low price range for a long time. We got a bit of a bump late last year. People were excited. And then it just, senior convertible note day hit, and the market didn't like it. It got a lot of press coverage, which is a little bit suspect. A lot of short interest too. Maybe those two things are correlated. What were you seeing in SoFi at the time, and what do you think of the company now? Because it's had a great run.
Yeah, I mean, SoFi is one of those stocks that I wanted to buy for a long time, but I also, in other names that I thought were better, like Robinhood. But then Robinhood went up, and then SoFi became very attractive because they kept posting incredible results, and for some reason the stock would dump. And I was like, why is this stock dumping when they just flew revenue, EPS, and guidance out of the water. And that would happen and happen and happen. And I was
Hmm.
like, okay, maybe there's something here. I knew the stock because I watched videos from Tanner and some of you guys. And I started doing like real DD, maybe like, I don't know, 8 months ago or something, maybe a little bit before that. As I was planning to get into the new position, right? And I mean, Robinhood is still one of my biggest positions. I'm not
Sure.
out
Yeah.
of the stock at all, but it's not my biggest. My biggest is now SoFi because essentially it was too cheap. Essentially, I was
Oh yeah.
trading at below. At some point, it traded below three price to sales,
Yeah.
and that was like three price. Okay, at 30% growth in revenue, about to turn profitable, and you can see in the net income how it goes from like losses into positive net income, and you can see that in a chart very easily, right? You can
Oh
see a
yeah.
trend. So I was looking at that trend about to flip, and then PS of 3, negative sentiment, the stock just doing incredible fundamentally, and I'm like, then I started looking at the tech platform, and in my software background, I took a look at their API, and it looked
Yeah.
incredible. It looked even better than the Stripe API, like in terms of like tech documentation, like implementation examples, languages supported, everything. It seemed like pretty well crafted product. Uh, and I started getting excited, But the thing that sold me was the valuation was just too cheap for a company this good. So I thought it was just like ridiculously undervalued. So I went in very, very heavy, perhaps heavier than I should have gone. And I bought a lot of leaps, like a
Yeah.
ton of
Me too.
leaps. So yeah, that one's doing, it's already a 5x and it just doubled, right? Like the
Yeah.
leaps are 5x and
Oh
it's
yeah.
just incredible. So yeah, I mean it's one of those companies that I couldn't believe how mispriced it was and how much people had negative sentiment based on past performance.
Oh yeah.
That always throws me out of my boat. But I think it's just people. I don't know. I've learned to ignore a lot of the comments,
Oh yeah.
because in fact I look for the negative comments to like confirm my thesis. If I have a lot of negative sentiment, it's even better
Yes.
because yeah, right. That's where the alpha is. A lot of
Yeah.
those people selling their shares, and we would post the charts, right, for the retail inflows and outflows, and we'd see even now they're probably still net sellers. I mean, I feel bad, I feel bad, but I'm like, I told you guys, Roy told you, I mean, everybody did. Tanner told you, Chris told you, like, we do what we can do, but it's up to them, right? At the end of the day, and now everybody loves it.
Yeah, and I think, SoFi I think has a long ways to run still. Like it went from deeply undervalued to it's in fair value territory for me
Yeah.
now. In a bull market, fair value territory doesn't bother me at all. I'm not adding just because it's like 20 something percent of my portfolio just because of the run up and the leaps. Uh, but the really attractive thing about names like SoFi, names like Robinhood, to me, is when they have that negative sentiment and they've been pushed down so far. I don't have the tech background that you have. I've looked at Galileo, the APIs. For me, like from what I saw, I'm like, it looks best in class. It looks impressive. I have some questions and concerns on some aspects of the SoFi business, including their invest strategy, their credit cards, tech platform, like the actual pipeline, what that looks like. I'm not sure it's going to be the Amazon of the fintech world, as
Mhm.
many people were talking about, a couple of years ago. It might be like I'm not as confident these days, but when it was trading down so low, you get all those things for free, and
Yeah,
so
pretty
there's
much.
like there's no risk, at least from my perspective. So,
Yeah, because even
are
financial services was exploding. So if you look at
correct.
lending and financial services alone, it would more than justify that three, not that, yeah, three PS, which would essentially be like an $8 price per share. So yeah, even back then you get all of that for free because the financial services part was growing so fast, and even now it's accelerating. And lending, we knew lending was going to come back as interest rates went down, right? Because they do a lot
Yes.
of
Yeah.
um, personal loan refinancing and a lot of solar as well. Back in the day, especially now, not
Oh,
so much. So I think they're doing a lot of more credit consolidation and things like that. But we knew all of that was going to come back roaring.
right.
So I was never worried about the invest platform because I was like, that's that's a non-issue. Every single company has that garbage product that
Yeah.
that they, I don't
Yeah.
know, bro. Like,
It's more neglected than garbage, but
yeah,
but yeah, I hear you.
it
It's that,
is. It is what it is. I don't think they
yeah.
even bring that much revenue to financial services anyway.
No, it's
I was never worried about that part because like Robinhood has a certain banking side. I never bought it because of that. I bought it for the
oh yeah,
trading platform, so that never bothered me. Like, companies do explore into other venues and things like that. It is what it is.
right.
So, but the thing they're incredible at is originating loans and providing financial services in one hub, right? So that is what I bought it for, and then the tech platform was sort of like the cherry on top. That I think a lot of people are bearish on that right now, but I think it just has to do with the number of deals, because this is a B2B. This is completely different than the rest of the stuff. The rest of the stuff is mostly B2C.
Yeah,
So when you have a B2B product that is sold in big deals like that, the the um, the amount of deals that come is very directly proportional to how good the industry is doing at that particular point in time. So we've known that financial services has been on the back burner for most of like Joe Biden's presidency. So it was just not the best environment for that. But as all of those companies start coming back, I think the deal flow is gonna come back for the tech platform, because you're gonna see a lot more lending. You're gonna see a lot more what is it called, like pretty much the fintech side has been like in the background for 2 years now. So I think
right.
it's coming back, and you can see it in the Galileo accounts, right? Like, you can see even with the slow deal flow, they're now supporting 160 million accounts, right? That's like
Right.
half of the US population. That's not bad. That's not
Yeah.
bad.
To be fair, there's some folks that have multiple accounts, they're
Oh,
individual,
for
but yeah,
sure. For
it's
sure.
not a small number at all. It's not, and of course, there's a long way that they have that they can grow. Sorry about that. One of the things that I think that is really interesting about yourself is that I don't know if you characterize yourself this way, but you tend to gravitate towards stocks that are cyclical, that you understand that the cycle is going to invert before the market does. And so I see
Mhm.
that, with Robinhood, it was heavily cyclical at the time. It's a little bit less so now, but with the crypto winter shifting into the crypto bull market, with the bull market continuing and equities being very, very good, and of course higher for longer. SoFi, you just mentioned it with lending. Do you like intentionally gravitate towards that, or is that just how your mind naturally works?
I think now that you mentioned that, I never thought about it from that particular point, from that particular angle. I think what I look about revenue is the main thing. So if I can predict turnaround and revenue growth, that's incredible. But I don't look at it from a cyclical lens, although maybe I gravitate towards those types of companies because I want to look for something that is really undervalued. So
Right.
for something to be really undervalued, the sentiment has to be in in the garbage. So maybe that's why. But because Tesla was also a cyclical name, right? So, and
Yeah.
that's how I retired essentially. So, and many people did as well. Tesla's still like one of my biggest positions. But now that you mentioned, maybe there's a pattern that I haven't seen. But that wouldn't be my first point of interest if it's cyclical or not. Maybe that's just a byproduct of other things.
Yeah.
But I need to see something that is essentially hated, and valuation is really important. But I'm more like a growth investor. So essentially, what I'm trying to do is I'm trying to predict a change in profitability with high revenue growth. So
Right.
all of those companies, they have in common that they either growing revenues very fast or about to grow revenue very fast. If you can
Yeah.
predict any of those two, it's perfect. In the case of Robinhood, they were about to continue growing revenue fast. They were stagnating for a little while, and SoFi was even easier because they were always growing fast. So they were just neglected. And then if you can pinpoint that change between like going from negative net income to positive net income, that
Oh yeah.
change, that's where you can capture most of the value, right? And then on top of that, if you're looking for, I like to be in the 2 billion to 30 billion range market cap, because that's when you see the best multipliers in terms of like value capture. Because if
Sure.
you invest on something like I don't know, Airbnb, which I did. I mean, I'm not looking for a 10x on Airbnb. I'm looking for maybe like a 2x. It's
Yeah.
like a blue chip kind of thing that gives my portfolio a little bit of stability, right? But if I'm looking for a multi-bagger in that 2 to 30 billion market cap, which gives you a lot of options, right? If they're growing fast or about to grow fast and the market doesn't know, and they're about to turn profitable. So because that's when you can capture most value. So that's a little bit of my basic criteria, and then I go a little bit deeper into that.
Yeah, that's usually where I'm at too. That's why we're in a lot of the same names. PayPal is probably my Airbnb, where
Oh yeah.
it's more of a blue chip. It's I think it'll do better than a 2x, but it is uh, it's going to be there. Like it's going to
Mm-hmm.
continue to grow. It's not going to have like 20% or 30% growth rates. Like if it did, that'd be great. But no, I mean realistically, double digits growth, that's fine. But that was a very hated name as well. Now Tesla, you mentioned. Do you still have a Tesla position?
Yeah.
So
Tesla. Sorry, go
that
ahead.
went from like hate to it seems like adoration again. Why is Tesla like that? It just seems like it's like Dr. Jekyll and Mr. Hyde type thing where it goes
Yeah.
from people hate it and say it's dead and way overvalued like at 160 and at like 330 they're like, "Oh, it's cheap and it's under." What's going on?
Because it's the most popular name, so it attracts a lot of attention. It attracts a lot of opinions. A lot of people think they know, and most people don't. Not even Elon knows sometimes.
Yeah.
So I think it just attracts a lot of attention because of that. Because it generates a lot of clicks, and a lot of people talk about it because it brings eyeballs. So I mean, back in the day, it was brutal because we had short sellers flying drones into the factory, manufacturing like hit pieces. I mean, not that they don't do that today, maybe even
Yeah.
more
Oh
so,
yeah.
like due to a political nature of Elon has taken. But I think the stock itself doesn't have a big short position anymore, so that's good. But yeah, it's very volatile. It's very volatile because it's one of those companies that is either going to be the biggest company in the world, or it's just something mediocre. You know what I'm saying? So
Right.
it's very binary with Tesla. So I mean, back in the day, the opportunity that many people saw is, imagine they were trading at 1.5 price to sales. And people were saying, people were saying, people were saying, oh no, Ford is trading at 0.6. And I'm like, guys, we're talking about like twice the gross margins. You gotta compare this to like Apple, and Apple trades at 7 to 8 PS. Like people are doing like the wrong comparisons. But yeah, Tesla is a beautiful company. I like it so much. It has financed my lifestyle for about 3.5 years now. So obviously I've taken profits. But I mean, I bought property in Miami because of Tesla as well. So Tesla,
Oh,
I love
nice.
Tesla, man.
Yeah,
Tesla,
congratulations.
thanks.
Now, let me ask you this because this there'll probably be some pushback in the comments, and I'm holding Tesla too. It was my number one buy this year as far as allocation in the first half of the year because I thought it would just the narrative had just turned so bearish. But even then, like the PE, the forward PE, price free cash flow, and price that sells were obscene. So why some people would say from this standpoint valuation metrics, not growth
Hmm.
metrics, we'll just ignore this right here,
Hmm.
but even growth is slowed 8% year over
It
year.
has tremendously,
Why
yeah.
are you still in the name given that? Like what are you still seeing?
Well, I'm still in the name, but I haven't added to it. So I wouldn't
Yeah.
add right now simply because it's not the best deal in the world.
Yeah.
So we're looking at 97, PE, something like 11 PS. The growth has slowed because of same thing that happened to Enphase, right? Like the interest rates are just incredibly high, and if a company is mainly using credit to sell their products, it's a it's not the best name to own at this point in time if you're looking for a multi-bagger, which I am.
Yeah.
So, but I mean, it's a steady grower, right? So if the all of a sudden the environment changes a little bit and they can sell their cyber trucks, which is I think that the next leg of growth. I don't think autonomy is that. If it were, it would have already happened. People have been talking about autonomy for Tesla for, I don't know, 7 years now. So I think autonomy will be a very nice addition to the services category, but I don't think it's gonna be changing the world type of thing. Maybe it will, but I'm
Yeah.
not betting on that. I wouldn't bet on that. I wouldn't invest on Tesla for the autonomy. I would invest on Tesla for the Cybertruck if they can figure the robot, because the robot doesn't put lives in danger. That's a main issue. Because I've had a Tesla for since 2018. I had the full self-driving package for as long as they've been selling it, and I tried the product. Like I have the not the latest hardware, but the one before that, which is pretty good.
Hardware
Is
3?
yeah, I have hardware 3.
Same,
Yeah, I think they now release the 4th generation or something.
yeah,
I
yeah.
don't have that one,
No, I don't
but
either.
the third one is was pretty good. I tried it. I used it, but it's not to a point where like you could just not pay attention.
Yeah.
And it will never be like that. I don't think. Because it's not about the actual software driving. It's about people around you. I think that's the biggest part. People just do stupid shit, and the software has to predict other people doing stupid shit. So I think the software will be incredible, but there's still other people that I worry about. So if they do solve it, I'll be very well off. But if
Oh
they
yeah.
don't, other things are doing well. So, but yes, it's not a company that I will start a position at this point in time,
Yeah.
because as we saw, that the valuation is not indicative of a good deal.
Yeah, I stopped buying around 220. I should have bought a little bit more, but I got a much bigger position. I think I quadrupled or 5x the position this year. So
Hmm.
I was doing my part, but no, autonomy is one of those things that I think will happen. Hardware 3, I don't know that it'll happen under, because you and I have experienced full self driving. Did you try full self driving this year with 12.36 or
Yeah,
12.41?
yeah.
It for me had moments of like just that I was in awe, and I'm like, this is
Hmm.
this is amazing. But there's persistent moments where I'm like, hey, it just keeps messing up on these things time and time again. There was one instance where it avoided a wreck that I think it would have been a minor fender bender. Like it wouldn't. I don't think it would have totaled the car. But it had that instant reaction time, and I have a very good reaction time. But
Hmm.
I think if I didn't have full self driving, I would have been in a wreck at that point. Just because I live in Houston, and well, Florida is also notorious for terrible drivers.
Yeah.
But I don't know. What I've heard from others that are usually skeptical on hardware 4 is that yeah, it's very viable. It seems like it performs a lot better there. Uh, I think it's a matter of time, but like in a lot of people's mind, and in my mind as well, it's not real until unsupervised actually happens. As far as regulation, as far as some persistent success, at that point, I think that it'll happen. I'm like 90% confident, but yeah, if it doesn't, they have a lot of growth vectors as well. It's not cheap, but yeah, I don't mind holding it here.
Yeah, and they could the misconception that people have is when you talk negatively about the idea of robot taxis, they think that you're saying that they can never make money on them. In fact, they make money today on services. They make money on premium connectivity, and they make money on selling the FSD on a subscription basis,
Yeah.
and that is incredible because that is what 100 a month or something like that. I don't know the latest price, but essentially it's pretty much 100% margins on the
Oh yeah.
services category, which is in itself pretty high margin, except for supercharging, which is mostly break even. So, I mean, you can make incredible money if you had a subscription that was 100% margin and you were selling that to, like, I don't know how many millions of cars are in. I mean, that is an incredible business model. That's how Netflix makes money. In fact,
Yeah.
on a much lower cost basis and price range. So this subscription should even be more enticing. Now, I think the pricing is a little bit off, but they will
Mhm.
make tremendous amounts of money from this. It's just not gonna be the $3 trillion TAM that people are imagining. If it is that, beautiful. We're all gonna make money. But I
Yeah.
wouldn't I wouldn't bet on that.
I wouldn't bet like it being that big, but I think it'll be significant. But it'll
Now the
take a while to
robot.
roll out, and it's all like state by state and in localities. But as more and more data hits, not just what they're compiling on their end with their hardware stack, but as like if they're supposed to push out, and I'm skeptical on Elon Musk timelines. But they're supposed to push out unsupervised driving in Texas, where I live, and also in California this coming year.
Mhm.
If that works, in those two states, we're going to see it begin to spread, not everywhere, but a lot of places, and then eventually everywhere. So, insurance also interests me too. Like that's another aspect of their, what they're doing. Like I switched over from my insurance company to Tesla insurance because I'm like, hey, it saves me a considerable amount. Of course, they monitor me, they give me a safety code. They seem generous so far. We'll see how that goes.
Mhm.
But yeah, it's a lot of opportunity there just on that side.
That falls under services too. Big
Yeah,
opportunity there. I think Tesla can become the biggest company in the world without FSC. If
yeah.
they can
Oh, I
figure the
agree.
robot, or they become a big
Optimism.
insurer, or anything, they have so many ways they can make this, or they can reach this market cap that doesn't involve figuring out FSD. But yeah, I mean, if we're talking about like opportunities in the market, I think there's better opportunities to be accumulating.
Yeah. Energy is, of course, one of those things that's doing quite well for Tesla. There is some overlap with Enphase. They compete a little bit, though they do have some very different products, hitting more of the commercial side with the mega packs. But Enphase is one of those names that is very cyclical in the solar industry that I've just picked up. I initially invested, I don't know, a year and a half, 2 years ago, and I said, you know what, I'll just go more into Tesla. I think that's a better play. Turned out that it was, as Enphase has dropped and Tesla has risen up. But Enphase, you've been in for a while. You're still in
Hmm.
Enphase.
Yeah, it's
So
one of
yeah,
my positions, although not one of my biggest positions, but
yeah. So that's one that has continued to like just not benefit from. It's in a bear market right now as far as solar.
mhm.
Do you think that that's going to be changing at some point? What are you looking for from the company, and are there any concerns you have?
Yeah, I mean, the thing about Enphase is, although they have the best product by far with the microinverters, and I think it's pretty unanimous that it's the best system as opposed to the central unit, right? So they have the best product, but what happens is they're so dependent on financing that their fundamentals have actually decreased a little bit. If
Yeah,
you go on microinverters, you see that microinverter sales have
yeah,
plummeted. And I think this is because they depend so much on a whole package financing to sell it to the not themselves, but the installers will sell this package of, we're gonna install the roof, and we're gonna install the micro with the microinverters, and then everything here and everything there, and it's gonna be what, 70K for something like that. If you finance that at 7% or 8%, that's a huge difference as
yeah,
opposed to three, which is
yeah.
what they were doing before, 2, 3, something like that. So I think it's very in sync with the real estate market in that sense, because it's so dependent on big financing like that now a lot of it is not feasible, like it wouldn't, because it has to be economical for the people who are going to install this, right? So it is
Right.
so cyclical, it is so incredibly cyclical. So I think if interest rates drop, they're going to do well again. So I think you're essentially positioning yourself for that. And I mean, Elon said the other day that solar is not going anywhere. Now Tesla doesn't suffer as much because Tesla, as you said, is mostly on the commercial side. Like
Right.
their solar installations on like regular houses is pretty minimal. It's
Hmm.
it's very very little, very small percentage of their energy revenues. So, but they essentially have a monopoly on mega pack and super pack and all that
Yeah.
like grid scale utility installs, right? So they have no competition in that sense. That's why they can charge 35% gross margins. Um, Now Enphase is just at the mercy of interest rates. So it is a company that, if you knew interest rates are gonna be like 2% next year,
Oh
Enphase
yeah.
is gonna do well for sure,
Oh yeah.
for
Yeah.
sure. Because they just have the best product, and a lot of people say that Enphase should drop prices on microinverters, like the gross margins. But I think that the strategy that they pursue of keeping like very stable pricing, that's the best way, because I think the biggest cost is not even the microinverters, it's the installation cost. Labor is the biggest cost. So essentially, if you have high interest on very expensive labor, lowering the price of microinverters is not going to do anything for you. So it's not going to be much of a difference in terms of the total cost of the system. So I think they're going to do well, but they're just dependent, and there's nothing they can do about it. They've actually not mismanaged the company in any way that I can think of. It's just they're at the mercy of the macroeconomic environment, and especially like Fed fund rates. So that's just the way it is. So if you want to buy it because of that, that's great. I'm not buying at the moment because, as opposed to like something like SoFi with Enphase, from its fundamentals actually did drop. But
Yeah.
Enphase also noise. You know what I'm saying? With Enphase actually it did drop.
That is
but
true.
but it's now coming back up, especially in the US. So we'll see. But yeah, I mean, I still hold Enphase because it's so much potential that you have to have a little bit of an allocation if you care about clean energy. So I have an allocation on Tesla, I have an allocation on Enphase, and that sort of like takes care of my clean energy solar exposition, if you could put it like that.
Yeah, and I think you hit the nail on the head. It's heavily cyclical. The industry always has been. I think this will be their third solar bear market that they'll have survived, and they will survive. Like their balance sheet is good.
Yeah,
They still
and
make
they're
money.
profitable.
Yes, yeah, that's like key. They're not like Solar Edge, which just prints money and then just falls off a cliff and nearly dies. But the other aspect beyond rates, which I think the rates are the most significant, is of course energy prices. One of the bear cases I've seen is people say, well, now that Trump's elected, maybe some of the manufacturing incentives or solar installation incentives will go away. This will kill the business, even if rates fall. And of course, they're doing drill, baby, drill. They're pumping a lot of oil. There's nuclear reactors being, expanded upon and forget the term, but brought back up. And so energy is a lot of people are thinking energy prices are going to continue to plummet. How do you think? Do you think that that's true? And
no, not really, because I mean, we're talking like if Trump wasn't president 4 years ago, and that's when Enphase did the best. So you cannot be like, oh, Trump is gonna ruin the whole industry for Enphase when Enphase did the best when Trump was president. So I mean, yeah, energy prices matter, right? But it's like, yeah, you can drill, baby, drill, but that doesn't really affect the grid that much because that just affects gas prices, right? Um, the grid is a different sort of it works on coil and some other things, like it doesn't use gasoline, right? Like we wouldn't use gasoline for electricity. But if you see the electricity prices on the retail level, they actually have gone up, and I don't think the barrel of oil could go down and the energy could still go up, because it's about like maintaining all that infrastructure. So yeah, I mean, I don't think it matters that much. I think interest rates matter so much more than energy prices. It's not even close. What are we looking at? United States prices? The crude oil. Yeah, we're now number one. You're muted, I think.
Yeah, sorry. The biggest thing, we'll edit that out in production, I guess. The biggest thing that I see that people have wrong is they think for some reason, and I guess it was kind of quietly done, that Biden was completely against oil drilling and everything. And you can see, like, part of it was, of course, prices, geopolitical issues as well. But this light blue line, this is United States. Headline, of course, is United States produces more crude oil than any country ever, like, period. This certainly wasn't the case back in 2013, although, things were ramping up. So the idea that Trump will suddenly like just drill, baby, drill, and there'll be a lot more oil. I think oil production will increase. Exploration certainly will increase. But like it's already been increasing. Like this isn't going to be, I don't think we're going to see like $1 a gallon again in the United States ever. But energy prices are not necessarily correlated to oil. It is a factor, but I don't think that's the only reason why people buy solar. I think it is. Bottom line is like, is it worth it? And the biggest thing that makes it worth it is the interest rates itself. So the other thing too, as far as the manufacturing credits, Trump is very pro manufacturing here in the United States. Tariffs might have an impact on the industry because a lot of the panels do come from China, and that it has an input on the costs. But may also impact Tesla as well. There's a lot we don't know as far as like how that'll actually shake out over the next little bit. As far as other names, D-Local is one that I see that you mention a lot. D-Lo is a symbol. That's one I don't know a lot about. They're based in Brazil. That's correct?
No, they're based in Uruguay. Essentially, they're an Argentinian company that doesn't incorporate in Argentina because Argentina used to be a communist dictatorship. I'm joking, but you get the gist of it. Just like Mercado Libre, right? It's an Argentinian team, but I mean, people in Argentina, they say Uruguay is sort of like a province of Argentina. They're next to it, like Montevideo is like right next to like Buenos Aires. Essentially, a lot of the talent is Argentinian talent. In fact, their new CEO, it used to be a CFO for Mercado Libre, Pedro Arndt. So this guy is a superstar. But yeah, DLO, it's essentially like Stripe or Braintree or Adyen, but essentially emerging markets. And the reason why I think this could be a very interesting opportunity is because it gives you a lot of exposure to the global south.
Mhm.
Essentially, they're a one-stop shop for everything that has to do with payments in either Africa, South America, Southeast Asia, and pretty much, like all of that, right? Like they don't get into Europe because Adyen is pretty big in Europe, and they don't get
Yeah,
into North America because Braintree and Stripe are dominate that market, right? So they essentially are very happy with uh, serving the South, the global South, and the benefits of that is they can charge higher take rates. So
right.
they have incredible take rates, although they've been dropping, and that's why the stock actually went down, because you see their payment volume go up but their take rates go down, so essentially revenue stagnated a little bit. But they're essentially been fixing a lot of the issues that caused that to happen.
Yeah.
But yeah, anyway, you're gonna say.
Well, that's a lot, what was happening with PayPal as well, and it's still it was one of the biggest bear arguments is like the margins are going down. It's a race to the bottom. This is a commodity business. Commodities businesses are not necessarily bad if you can do it at scale, and Delo
Mhm.
seems like they're able to do that. How so? Being in emerging markets, they do have larger margins, but it seems like that they're more at risk as far as geopolitics. I'm
Yeah, I
in.
mean, there's more volatility, not geopolitical risk, more like currency risk.
Yes. Oh,
So
yeah.
currency volatility, when there's like a big spike or a big inflation or something like that, then they get affected. But as they expand into more markets, I think if Egypt has some sort of devaluation event, that doesn't affect the rest of the world, right? So
Yeah,
if
that's true.
Argentina has one of those, then so essentially they um, diversify in that sense. But the biggest thing about dLocal is the thing that caused the stock to go down is the take rate thing, and the take rate issue was mainly a merchant in Brazil that went into the market. They were essentially optimizing for speed, and what they did is they didn't really negotiate price, so they were doing something like 6% take rate, which was essentially 30 times what they could have charged from a local provider, right? So essentially, when they renegotiated all of that, right, what ended up happening is the take rates went down for the local as a whole, because if your biggest merchant wants to renegotiate, it is what it is, right? But it wasn't because the local were in danger of everybody renegotiating. It's just this merchant just wanted speed, and they got into the Brazilian market, and they did really really well. And you can see the payment, the transaction payment volume, which is essentially the most important metric. As long as that goes down, if take rate stabilizes, you'll see it in the revenue. As you can see in the revenue, you see although the payment volume kept going up, if you go and see revenue actually stagnated a little bit. If you go
Yeah.
down a little, you see in the last
Yep, I
four
was
months
noticing that.
it stagnated, and you're like, how come? If payment volume went up, it's because the take rate went down for a whole year, and the stock price mirrors that. So we see for the first time in the last quarter, take rates actually increase a little bit.
Yep.
So you like essentially this is a take rate play, in the sense that as long as you know that take rates are not gonna keep going down, essentially as payment volume goes up, you're gonna make money, and you're also betting on the Argentinian market, because
Mhm.
Argentina is I think their fourth biggest market. So first one is Brazil, is doing incredibly well, because Ukraine and Russia, they when they went to war, essentially the biggest exporters of I think wheat and a little bit of soy, they essentially disappeared. So Brazil had the best crop season for wheat last year. So essentially, they They're doing incredible right now. And Mexico now with Trump, they're essentially getting a lot of the business that used to be in China. So Brazil and Mexico, the two biggest markets for DLO, are like this.
Yeah.
The third is Egypt, which is also going through tough times,
Hmm.
but they have a lot of potential. And the fourth is essentially Argentina, and Argentina is coming back up due
Yeah.
to MELI. So a bet on South America, especially on Argentina, for me is DLO, because the other one you could do is Mercado Libre, but now then we go to valuation. Mercado Libre is what, 8 times price to sell, something like that.
I think
Uh,
it's
yeah,
fallen a lot. Let me
it's
look that
fallen
up.
a lot, but even then, it's expensive. Numeli, what is it? Yeah, look, they're at 6 PS 5.5, and then forward 44, and then current PS, current PE is 70.
Yeah.
So I mean that's not bad, but I mean, have you seen DLO? It's like crazy. It's essentially we go back to enterprise value again. They are 2 billion market cap, and they have 700 million in cash or something along those lines. I mean, they've gone up a little bit now, but
Yeah.
you see,
There's a
it's
valuation
three.
right there. Yeah.
Yeah, it's insane. Like look at that. It's 29 and 20 forward, and then the PS is 4.4, but that's actually the regular PS. I like to do it with enterprise value, which brings it down a significant amount, because if you go down, they have no debt, right? So it's essentially Robinhood all over again, although not to that degree, right? But you can see in the
Yeah.
cash and debt go down a little bit.
Yeah, right here.
You see, that's what, 600 or something, almost 700 million
Yes.
in liquidity on a $3 billion market cap. That brings the enterprise value by something like 30%,
And I
35%.
do love when companies like Robinhood, are like this, that they have like zero debt. Palantir is one of those too. It eliminates a lot of downside risk. A lot of times when I'm looking at companies, I'll be interested at first, and then I'll actually look at what their balance sheet is, and I'll be like, oh, they're horribly in debt. Maybe not.
Yeah,
It also speaks to how they actually treat their shareholders in terms of the actual cash that they use. If they're just going horribly in debt, if they're diluting left and right and not actually achieving growth. I don't have a problem with dilution, but they got to actually grow.
they're
Yeah,
actually buying back.
yeah, no, that's a great thing, and yeah, this I'll have to give this a look. It's attractive. So, you mentioned Mercado Libre is the other exposure. I think that there's a third one. What do you think of
Nubank.
Nubank? Do you have an opinion on Nubank?
Yeah. I think Nubank is great. I think they're very well positioned to be the biggest bank in Latin America. I think
Oh
the
yeah,
issue that I have with MELI and Nubank is that they're just so popular. I want something that is a little bit more unknown. So that's why I don't get into Nubank that much. But I mean, they've been dropping a fair amount, so I think they're a pretty good deal right now. So, but yeah, if you were asking me, if you wanted exposure on South America, what's the best play? It's probably either Mercado Libre or Nubank. So yeah, I think, and a lot of people have done well.
oh
So
yeah,
when I'm betting on DLO, I'm essentially betting on the leadership from Mercado Libre.
yeah. And the
Um,
demographics are absolutely on our side here. Like with Latin America, where they're going.
yeah,
When if you have a Latin American company that's just in one country, I think there's a lot more risk versus like Mercado Libre, Nubank, DLocal. Like it's spread out over multiple countries. It doesn't mean that there's not risk, but yeah, I don't like to venture out beyond the United States much and often, but Nubank is an exception.
mhm.
Mercado Libre, I've been interested in. I've never built a position. I probably won't. Yeah, DLO, I'll give a look. So thanks for
Yeah. The issue with DLocal is that essentially they're allowing the US and European and Chinese merchants to actually sell in the emerging market. So it's not essentially an emerging market company per se. They're serving the right kind of clientele. So they're
right.
serving the West and China, obviously. So pretty much is, if Nike wants to sell in Argentina and they want to sell in Mexico and they want to sell in Nigeria, they have one-stop shop to do all of those transactions. In fact, I mean, Uber is one of their biggest clients. Whenever you take an Uber in any of those in Egypt, an Uber in Argentina, Mexico, Brazil, you're essentially going through DLO's network, and that's the biggest thing, right? Like Spotify as well. They're serving the right kind of clientele in the global south. So although their clientele is the right kind of clientele, it's a way for them to get exposure, and they have like a one type shop, because a lot of these people in the emerging markets, they don't pay with credit card, they pay with weird things. Like they have apps, different apps, they have like the weird phones that are not like smartphones, and they pay like in Africa. So imagine if you're like Spotify,
Yeah.
you're not gonna want to figure all of that complexity. So you want one solution, and yes, they're more expensive than a local solution in say Nigeria. But if you're in Nigeria and want to go to South Africa and then want to go to the Philippines, you don't have to deal with more implementation. So it's just simplicity of I already have a contract with those people. I know it's already set up. The tech is set up. All the APIs are connected. I don't have to like do anything. I just switch the country, and then boom, I'm selling in South Africa or in Philippines or whatever. So that's
Sure.
the selling point, right? And a lot of people, as you said, say commodity, right? Because Adyen and Stripe and Round Trip and all that, right? Like, yes, they're all selling in the same markets,
Hmm.
but it's a lot more difficult to figure out all the complexity in multiple emerging markets that it is in Europe. In Europe, everything's sort of set up already. That's why
Yeah.
the take rates for something like Adyen are in the 1% or something like that, as opposed to the 4%. But yeah, I mean, I think a basket of companies like Mercado Libre and Nubank, especially now that they've dropped a little bit,
Yeah.
will be ideal. But the mistake will be to not have exposure to the global
Yeah.
south, especially South America.
Yeah.
Because as you said, have you seen the fertility rates in the West?
Yeah, not great. Like that's if it wasn't for immigration, we'd be losing population. That's
Pretty
not
much, yeah.
amazing. Europe is in some areas where they don't have heavy immigration. Yeah, Russia is one of those certainly. Yeah, Latin America, just where they're at in their economies as far as emerging markets, and a lot of the geopolitical stuff is actually Brazil is maybe an exception, but it is resolving itself. MELI is probably the classic example, but certainly Mexico has
Hmm.
made improvements as well. A lot of nearshoring is happening, like you mentioned and alluded to. It I wanted Latin American exposure, so that's why I looked at Nubank. That's why I looked at Mercado Libre. Ended up buying Nubank. I doubled down my stock position. Dilo, I'll take a look. I don't want like 50% of my portfolio in Latin America, but like 10% would be fine. Like that, I don't want to miss that. So, and I rarely go outside the U.S.
Yeah,
Any
yeah.
other stocks or companies that you are seeing like D-Local, like Enphase, that are maybe beaten up, ignored, forgotten, left for dead, but you think that have a great opportunity potentially?
Nah, not really. Not ignored like that. Like most stocks have actually done pretty well. I don't see that many other opportunities in the market. I mean, the other one that is the only other two that are in my portfolio are like like Airbnb and PayPal, but those are kind of like blue chips, and I don't even
Yeah,
have that much. Um, so yeah, I mean, pretty much everything else is sort of doing really well, better than I would have predicted, to be honest. So the only company that I'm actively like buying right now is DLO. Maybe I'll find another one in the future. Um, but yeah, I mean, even hymns, it's just doing so well. Like, it's not even
yeah,
worth buying at this point in time. I mean, they're like now 30 or something.
yeah. That
Um,
it could fall to 15, next month. It's him. It's the most volatile name. So, were you ever holding him at one point, or just kind of looking at it?
yeah, I mean, it's part of my portfolio. I did really well on hymns, although the famous thing is I should have bought more, right?
Yeah,
It happened with Palantir as well. Like, I bought in the
yeah,
7, but I didn't buy
yeah,
enough. Because I was starting to like really like understand the company,
yeah. And
and
it's complex.
so now I have like a very tiny position that is like up 700%.
Yeah.
Portfolio.
Less tiny now after that run. Yeah,
Yeah,
I
it
went
should have been.
90% in Palantir when it was like, at $7 or $8. I was selling everything else. I was even selling my own plasma. Like at that point, I'm just like, I need more Palantir. And it worked out. So yeah,
Yeah.
hated names in quality companies. Like that's the theme. You tend to see cycles well. You've done so well. I'll have to look in Delo. I don't know if I'll just double down and continue to double down in Nubank or go and maybe diversify a little bit here. But I really appreciate you coming on, just kind of sharing through your views, how you identify companies that are hated and find that they're quality, what you look for. We'll put a link here as far as where people can follow you on X, on Vizualstocks as well. Are there any other last notes, last comments that you'd like to leave the audience?
Pretty much follow your fundamentals. Don't get into margin. That's pretty much it.
There you go. All right. Well, thanks for tuning in and happy investing.
Thank you, brother.